we have seen, of course, quite a strong rally over the past few weeks or even a few months. You just also mentioned in most markets, we have seen record all-time highs already. So I think what we are seeing today and also a couple of weeks ago, some pullbacks are usually quite normal. And I would also say quite healthy in this instance. So hence, I wouldn't really rule out that you might be able to enter the markets at slightly lower level, but we won't really expect here any sharper correction. And when I talk about correction, I'm really talking about more than 10%. So I think pullbacks in the range of 3 to 5% is always possible. And that's when we are recommending our clients to add equities or risky assets if they can afford to do so. But I think in the longer run, equities is and are the main assets to own, because looking at growth perspective and also here how the bond markets have reacted also to higher inflation expectation, I think from our perspective, equities still remain the most attractive asset class.
So the question then is, what do you think is the best geographic area to own for the next 12 months?
We have been calling for Asia, and here in particular China. Obviously, China has underperformed this year. I think markets are a little bit concerned about the tension still ongoing between the US and China, but also after the quite strong rally we have seen last year in Chinese equity. So this year it is coming down a little bit, but we would not be too concerned about this. So we would recommend to use this kind of weakness into the Chinese markets to build up position. So from a regional perspective, Asia in particular, China still remains our main call. I think when you look at the other region, Europe is getting more and more interesting, because here there is, of course, a time lag when it comes to reopening. We are still in some sort of lockdown here in continental Europe, but at the same time, vaccination progress is now finally moving ahead. So, for example, in Germany, vaccination per day has been doubling over the past few weeks. So you are expecting this to maybe happen in the course over summer. And hence that kind of pent-up demand also for European consumers, we think will be also quite substantial. And hence here, European equity markets typically always have that cyclicality, and hence we would also recommend to look at Europe as well.